Welcome back to Financial Cake, your go-to channel for making sense of the complex world of finance. Today, we're tackling a massive question that's been quietly brewing in the background of global economics. Is the reign of the US dollar as the world's primary reserve currency coming to an end? For decades, the dollar has been the undisputed king. It's the currency used for most international trade, the bedrock of the global financial system, and the main asset held in reserve by central banks around the world. This dominance has given the United States an unparalleled economic advantage, often referred to as an exorbitant privilege. It can borrow more cheaply, and its economic policies have a ripple effect across the entire globe. But the ground beneath this financial empire is starting to shift. A growing number of countries, particularly the emerging economic bloc known as BRICS, are actively seeking alternatives. This movement is what experts call de-dollarization. It's a slow, deliberate process, but it's gaining momentum, and its implications could be profound for everyone, from governments to the average person saving for their future. Let's start by looking at the BRICS nations. This group, composed of Brazil, Russia, India, China, and South Africa, now represents a significant portion of the world's population and economic output. Recently, the bloc has expanded, welcoming new members like Saudi Arabia, the UAE, Iran, and Egypt, further increasing its economic and geopolitical weight. Their collective goal is clear: to reduce their dependence on the US dollar. Why this sudden push? Several factors are at play. One major catalyst has been the use of economic sanctions, which have effectively weaponized the dollar-based financial system. When countries see how access to the global financial network can be restricted, it creates a powerful incentive to build alternative systems that are beyond the reach of any single nation's political agenda. This isn't just about geopolitics, it's also about economic self-interest. Countries want more control over their own financial destinies, without being so heavily influenced by the monetary policy decisions made by the US Federal Reserve. Think about it: when the Fed raises interest rates to combat inflation in the US, it can cause capital to flow out of emerging markets, creating instability and economic hardship for them. By diversifying away from the dollar, these nations hope to insulate themselves from such shocks. So, what are these alternatives? The most talked about strategy is the increased use of local currencies for bilateral trade. For example, India and the United Arab Emirates have already started settling some of their trade in rupees and dirhams. China and Brazil have a similar arrangement to trade in their own currencies, bypassing the dollar entirely. This might seem like a small change for each individual transaction, but when you add up the trillions of dollars in trade happening between these economic powerhouses, the cumulative effect is significant. It chips away at the dollar's necessity in global commerce. Another major pillar of the de-dollarization strategy is the accumulation of gold. Central banks are on a gold buying spree, the likes of which we haven't seen in over half a century. China has been a particularly aggressive buyer, consistently adding to its official gold reserves month after month. Other countries, from Poland to Singapore, are also beefing up their gold holdings. Why gold? Gold is the ultimate neutral reserve asset. It has no counterparty risk, meaning its value isn't dependent on another government's promises or financial stability. It has been a store of value for thousands of years, and in an era of rising geopolitical uncertainty and concerns about fiat currency devaluation, gold represents a safe haven. It's a tangible asset that can't be printed into oblivion or sanctioned away. By shifting their reserves from US Treasury bonds into physical gold, central banks are making a powerful statement. They are diversifying their portfolios and hedging against the risks associated with holding too much of any single country's currency. This trend isn't just confined to central banks. Savvy investors and even ordinary citizens are also turning to gold as a way to protect their wealth from inflation and currency fluctuations. The logic is simple: if the purchasing power of your currency is declining, holding an asset that tends to retain its value over the long term becomes incredibly attractive. Gold serves that purpose perfectly. This brings us to the crucial question: what does all of this mean for you and your savings? If the world does move away from a dollar-centric system, what would the impact be on the average person? A decline in the dollar's global dominance could lead to a decrease in its value relative to other currencies and assets. This would mean that the dollars you've saved would buy less in the future. Think of it as a slow, creeping inflation. Your imported goods, from electronics to clothing, would become more expensive. The cost of international travel would go up. Furthermore, if global demand for US dollars and US Treasury bonds decreases, the US government would likely have to offer higher interest rates to attract buyers for its debt. This could translate into higher borrowing costs for everyone, from mortgages to car loans and credit card debt. This isn't a prediction of a sudden collapse. The dollar's infrastructure is vast and deeply embedded in the global financial system. It has the most liquid financial markets in the world, and there is no single, clear alternative ready to take its place overnight. The Chinese yuan, for example, faces challenges related to capital controls and a lack of full convertibility. A new BRICS currency is still a theoretical concept with immense practical and political hurdles to overcome. Therefore, what we are likely to witness is not an overnight implosion of the dollar, but a gradual transition to a more multipolar currency world. A world where the dollar is just one of several major currencies, alongside the euro, the yuan, and perhaps others. In this new landscape, assets like gold could play an increasingly important role as a neutral bridge and a store of value between these different currency blocks. So, what should an individual do in the face of this monumental shift? Panicking is never a good strategy. Instead, the key is education and diversification. Understanding these global trends allows you to make more informed decisions about your financial future. It's about recognizing that the economic certainties of the past may not hold true for the future. Diversifying your savings and investments is a fundamental principle of sound financial management. This means not putting all your eggs in one basket, especially if that basket is a single currency. This might involve holding a mix of assets, including domestic and international stocks, bonds, and real estate. And for many, it also means allocating a portion of their portfolio to tangible assets like precious metals. The rise of BRICS and the renewed interest in gold are not just abstract economic news stories. They are signals of a deep, structural change in the global financial order. The world is slowly rebalancing, moving away from a single point of power towards a more distributed and diverse system. This transition will create both challenges and opportunities. For those who rely solely on dollar-denominated savings, the challenge will be preserving their purchasing power in a potentially inflationary environment. The erosion of wealth can be silent but devastating over time. But for those who are prepared, there are opportunities. The opportunity to protect your wealth by diversifying into assets that are not tied to the fate of a single currency. The global economic landscape is constantly evolving. Staying informed and adaptable is your best defense against uncertainty and your best tool for building long-term financial security. The end of the dollar's reign may not be imminent, but the trend of de-dollarization is undeniable. The actions of central banks and the strategic vision of the BRICS nations are reshaping the future of money. As we move towards a more multipolar world, the role of neutral assets like gold will likely become more prominent, serving as a timeless anchor in a sea of change. What are your thoughts on de-dollarization? Do you see the world moving past the US dollar? Let us know in the comments below. Thanks for watching Financial Cake. If you found this video insightful, please hit the like button and subscribe to the channel for more deep dives into the financial topics that matter to you.